Hey there, this is Jason Eichmiller, and I'm here with my good friend Peter Triolo, and he is a long-term care planning expert. And the reason why I'm so excited to have Peter on, and hopefully you're really excited for this too, is in my reverse mortgage world, I come across so many folks who are getting reverse mortgages for home health care because they don't have anything saved up, and because they don't have retirement, and because they don't have a long-term care plan. And one guy mentioned it to me, this was a few months ago, and it always stuck with me. He said, man, if I could just go back in time, then I could have paid for everything and I wouldn't have had these worries. So this is what we're having Peter on here. Peter is going to school us all about the wonderful world, and maybe not so wonderful world, of long-term care insurance. And he's going to tell us what our options are, what we can do, what we can't do, and hopefully you get a good idea. And at the very end, then we'll have Peter share his contact information so you can just reach out to him if you need him. So Peter, thanks for joining. Appreciate having you here.
Thanks for having me. I'm very happy to be here, Jason. Been looking forward to this conversation for a while.
Cool, man. Cool. So yeah, take me through. Let's table long-term care insurance, but take me through kind of like how you got involved with this, because it's such like an important thing to do for folks. But I know like with mortgages, I completely got in randomly. I don't think anybody will, in kindergarten like I want to help seniors with long-term care, or I want to do reverse mortgages or whatever. It's kind of
Yeah.
a process. So tell us about yourself and kind of how you got into this stuff.
Yeah, no, I could definitely share a little bit more. So I guess personally, like you said, Peter Triolo, working with the Bridge Group, we are a team of established financial professionals underneath the New York Life umbrella. So with that in mind, I guess like what my why is and why I love helping people, especially when it comes to financial planning, it all kind of reverts back to this financial house. You're very familiar with houses in your line of work. We like to really create this narrative of a financial house. And when you look at this house, what's the most important part of a house? It's building that foundation. And we always like to take that foundation first approach to our financial planning. And a lot of that does start with these protection first financial planning efforts, of which long term care is a massive piece of. And what I will kind of say to start off and kick off this conversation, long-term care planning in particular, it can be an extremely emotional process, but something that I always like to kind of showcase to the clients I'm working with or whoever I'm just being a resource for. Long-term care planning, it's not about fear. It's about freedom and control. At the end of the day, you want, and you alluded to this off the jump, you want the flexibility to kind of live your life how you want, and long-term care is a big piece of that. So yeah, starting the conversation early is always great.
You say starting the conversation early is great. Why is it? Why do you need to do it early?
So, and this is a good segue into just long-term care insurance and how it's built in general. To take a step back, long-term care insurance is essentially a policy that's designed to cover the costs of care that go beyond the traditional health insurance. So we're talking as someone ages and they need help with acts of daily living, things like bathing, dressing, eating, etc. Those are where long-term care policies can be extremely effective. In essence, you're planning for and packing for a trip that you never want to take, but you're very happy that you are preparing for the trip at the end of it too. So why it's important to really kind of like prepare early is when it comes to the contributions towards a policy like this, how they're designed is based on your age and based on your health history. So as you get a little bit older, um, contributions could skew a little bit higher if you're looking at these things, if you're 60 plus versus maybe if you were before 50 years old and looking at these policies and what, you know, certain cost structures can look like. There's a lot of customizable features with these policies, which is fantastic. But that's why I always am a big proponent of starting the conversations early and often.
Gotcha. I'd say stupid question, but you're going to get a lot of stupid questions. What's the difference between, so there's like supplemental insurance policies, say the Aflac stuff that you normally get when you're younger and you're working, and it can
Yeah.
cover cancer, heart attacks, the disability insurance that you do so well. What's the difference between those and a more traditional long-term care policy? Or maybe maybe start with what kind of ailments or conditions long-term care policies kind of cover and how it
Yeah.
works throughout life. I don't know.
No, it's a completely great question. That is not a stupid question at all, too. And a lot of, where these conversations revolve around is, as people age, and this is why long-term care in particular is such a crucial kind of component of a financial plan. Modern technology is absolutely growing at a crazy rate, and people are continuing to live longer and longer and longer. So the likelihood of people needing, assisted living facilities or even nursing home help, even in home care, that's a lot of where these conversations revolve around. And I would imagine you have a ton of conversations about this as well, because, as people age, they want to stay in their home. That is what their utmost concern is at the end of the day. And, things like reverse mortgages and long-term care allow for people to, live the life that they want to live. So thinking about it in that lens, that in-home care, the potential assisted living, the nursing home facilities, making sure that you are cared for, especially getting the help that you need as you continue to live life. That's, I guess, the differentiating factor between a long-term
Mhm.
care policy and your standard health care, or anything revolving disability insurance as well. um, and again, like I said earlier, so many of these things are customizable, which is great. But that's where also every single conversation is so different too. So that's why I love what I do. It's every single person you talk to is just so different, but in the best possible way.
No, that's good. And yeah, statistically, I forget who started this survey, and I think it's understated, but it goes like 90% or probably way more. Everybody I talk to, nobody wants to go to the nursing home, especially kind of the state-run Medicaid nursing home. That's like a non-starter with anyone.
Non-starter.
Um, but statistically, over 90% of people. So we've got to find 10% out there somewhere who want to go in. But everybody wants to live in their home for the rest of their life. And
Yeah.
anecdotally, my small sample size, I've done a little bit over 450 reverses. When people come to me with these conversations, I had this lady back in 2012 or 2013. She lived about 20 minutes away, so I visited her, and she was bedridden, and they were running out of money. She had heart issues and some other stuff too. So I think they were down to like their last $8 or $9,000. And as you know, and if you're watching this and you're looking at home health care, you know how quickly that money goes. It's incredibly expensive. So when I visited her, she was on her bed and it looked out to her backyard, and it's wooded, and there were these deer. I visited her in winter. There was these deer, and it was just like absolutely beautiful, kind of like I don't know, Norman Rockwell for home health care. um, so she told me, she looked at me really seriously after my bad jokes didn't work, and she said, "Hey, you're gonna help me stay in my home, or I have my pills." And she showed me, and these were big boy pills. And I thought, holy moly, I'm damn right I'm helping her, because she just told me she's not going to the nursing home. She will die in her home no matter what. So I said, all right, well, you're going to die in your home, but you're not going to die in your home next month. You're going to die in your home years and years later. So yeah, it's really important to be able to, like, you're charged with, and I'm both charged with something really important. It's keeping, if
Yeah.
somebody wants to stay in their home, can we keep them in their home? Or like your future, you don't even know, because they're young, hopefully young when they're coming to you. It's, hey, can you do the planning, get them set up something, so if this does rear its ugly head 15, 20, 30 years from now, they've got protection and they can die in their home.
Oh my
Is that about
gosh.
right?
100%. And yeah, I mean, that's a great story too. I had It makes me think of one conversation I had actually not too long ago too. I'm still laughing about it, but it's great that she was taking, a protection first approach to her planning. So she's a very big dog person, just like
Yeah.
myself. My fiance and I have a 9-month-old German Shepherd. We love him to death,
Mm.
but she was a big poodle fan. She has owned him her entire life, and what she was saying was she wants to take out a long-term care policy because she knows she's always going to have a poodle in her life, and she always wants to make sure that she can stay in her home so herself and her dog can make sure that they can stay where they're most comfortable at the end of the day. And like it was just simple
Yes.
things like that where I'm like, okay, this is just putting the bow on everything. Like, of course it's important to, plan for these things, but at least, we're making it the most out of the conversation. It was very funny. It was very funny.
That's awesome. I mean, everybody has different. I mean, my dogs, I have Belle and Lucky. They're down. I can't believe we haven't heard them bark yet. They bark at freaking everything.
Yeah.
So yeah, everybody has their. It's like Corona. Find your beach. Find your
Yeah.
reason.
Yes.
We already know their house is their beach, right? They
Yeah.
want to be in their house for the rest of their life, but everybody has different kind of reasons. So going to like what long-term care insurance covers. So let's say somebody buys it when they're younger. They get hooked up with you.
Yep.
They get covered. What does their coverage include? And probably more importantly, are there any exclusions? Like, are there any gotchas? Like, oh yeah, well, you thought that the defibrillator 5,000 was covered. Sorry, just the 4,000. Like,
Yes.
how does that work later in life?
It's a good question too, and I think the best way to kind of showcase it is there's a lot of ways to go about long-term care planning. There's a few different solutions that you can kind of tap into to make sure that you're covered. Three that boil back down to a lot of conversations that I have is on one end, you kind of have your classic co-insurance type approach. You're going to have to pay for 20% of X amount of things that, are affecting your long-term care qualified situation. If things kind of happen, the second bucket is essentially you would be paying monthly, annually, however you kind of want that to look, for a large sum of money that you can tap into however you need fit whenever something, if something were to happen to you. And then the third kind of bucket, and this is where if you're proactive with your planning, I love to have these conversations, and it's a hybrid solution. What they do a lot of these times, New York Life in particular has an amazing solution for this, is combined both long-term care and a life insurance solution. And why I think that is such like a lethal combo, especially when you're looking at this protection first planning, is with those two buckets of long-term care that I first mentioned, it's kind of like a if you don't use it, you lose it situation, which is not bad. I mean, it's important to make sure that your family is properly protected as well as yourself. God forbid something happens like a qualifying event and you need help with, eating, bathing, getting dressed, etc. But the hybrid kind of solution ticks off two very important pieces of the financial planning process. And it allows you to use this bucket of funds for each of those situations as you kind of like need. So, hey, if you never have a qualifying long term care event, that's amazing. You have this bucket of money that you can leave an amazing legacy behind for your family and grandkids at the end of the day. Or if something does happen, you have that ability to kind of tap into those funds as you need from a monthly standpoint to make sure that you're covered, and those costs for the skilled nursing or the in-home health aid are covered at the end of the day. And I think this also kind of rallies back into a few kind of statistics we see in the industry is over 70% of people age 65 or older will need some sort of long-term care help throughout their lives. We see that women tend to have a little bit longer of qualifying long-term care kind of situation. So on average, they're around that 3.7 year mark in total for their long-term care event
What do
compared
you mean
to,
by three? Hold on. What do you mean by
yeah,
3.7 year mark?
let's say I was having a conversation with a woman earlier this week actually, and She's a part of the sandwich generation. So she's early 50s. She
Mm-hmm.
has kids living with her at home. Her parents are 97 and 98, I believe they were.
Mm-hmm.
And her mom needs some assisted living help. And the exact reasoning for the long term care qualifying event is escaping my head at the moment. But for what the industry sees on average, whatever that qualifying event was, on average, it lasts about 3.7 years for women. So they need help with eating, bathing, getting dressed, etc. for on average 3.7 years. And that's compared to men where their long-term care qualifying events on average is around the 2.2 year mark. So think
So it
about it this
basically
way.
means
You
you get
go
the
for it.
care and then you're dying in 2.2 years, or you're dying in 3.7 years. Is that right?
Well, I don't like to think about it that way,
Yeah.
but yeah, of course, a lot of these, a lot of these compelling situations, whether it's leading to something like that, whether it's a long-term care event that happens because I don't know, a car accident happened or something of that
Mm-hmm.
nature. There's a lot of different rhymes and reasons for why these policies get tapped into, but I guess that also just speaks to the fact that you need to have that protection in place because to revert back to the story I was kind of just mentioning, this woman is now in her early 50s, in her prime time earning years, um, for the attorney firm that she's at. She's now needing to tap into some certain savings, looking at her retirement strategy to make sure that she has enough cost to offset the parents that are now needing to come visit her and live with her for certain moments of the year, and needing that home health aid help, and it's very stressful at the end of the day. So having that protection first planning is, now I'm just talking a lot, but having that protection
No, it
first
makes
planning is extremely important.
dude, it makes perfect sense. And don't worry about like the whole dying stuff or anything
Yeah.
like that. We're real with these with the folks. If you're watching this, I like sometimes a cuss word comes out
I never
occasionally.
like to
We
root for things like
Yeah.
that, but
Yeah.
it depends. I mean,
Yeah.
I guess the beauty of it is, like I said earlier too, with the advancements of modern medicine and modern technology, I feel like we hear something brand new with AI every single week. It's like
Hmm.
people are living 100 plus. It's like fairly consistent now, which is crazy to say, but that just goes to show you that like, hey, you can't really rely on whatever, social security, retirement savings. You need to have some protection in place to, God forbid, something happens to you.
Yeah. I'll get on a soapbox very, very quickly. And if you haven't been in the situation, you don't know it.
Yeah.
But home healthcare, even the CNAs, which are nursing assistants, which is non-skilled healthcare, it's like the lowest on the totem pole. It's what most people get. I think it's just because people need help with bathing or dressing, or they just need a companion hanging out with them because the adult kids are, just like you said, sandwich generation. They're going to work. But my God, is it expensive? If you
Oh,
have
yeah.
24/7 care with inflation and everything else that's going up in this world, you are going to run through. You could have $500,000 in your account and you're running through that. One of the challenges, Peter, that I have with reverses is, and I tell normally it's the adult children who come to me saying, hey, okay, my mom or my dad they either have home health care and they've got to go to the nursing home in a couple months because their money's running out, or a couple other reasons. But my goodness, like my challenge with the reverses is that, let's say that you get $400,000 out of your house, say $1 million house, free and clear. You might get somewhere between 400 and 600 something thousand dollars,
Hmm.
depending on your age. That still goes in a couple of years. And then,
Yeah.
especially if because you don't have a crystal ball or anything, and normally things don't get better, they get worse. And so life gets more expensive. So a lot of times with these reverses, I'm telling these people like, hey, I'm going to do everything I can to help you. Of course, I'm going to get you as much money as I can possibly get you. It's a given. But you still might come to, if you outlive this money, you still might come to a decision down the road, 3 years, 4 years, 2.5 years, whatever it is, where the money still runs out and you've got to go to the nursing home. So then you think,
Yeah.
okay, well, at least we're kicking the can down the road and mom has 720 more beautiful sunrises to look at. something like that? Because it's not,
Mhm.
none of this stuff is perfect. I don't know. Maybe you have I'm speaking too soon. Maybe you have a policy that is perfect or perfect-esque.
Hey, I
Um,
mean, as much as I like to think that, everything's like perfect when it comes to these policies, every single situation is so different. And I enjoy coming to work every single day and embracing those challenges and making sure that, we're customizing plans to, fit what people really need and what's best and what's in the best interest for, the policyholder at the end of the day. And you bring up a great point. I mean, inflation is crazy. Healthcare costs are just rising year over year. If you don't have proper protection in place, especially when it comes to long term care, certain family members could be draining upwards of over $2,000 per year. We've seen before in helping their parents and helping, their loved ones make sure that they're getting the care that they need. And it differentiates based on where you live in the United States. As you can imagine, like we're in the great state of Florida, there's a lot of people who need long-term care insurance in the state of Florida. And what I just hope and pray for is whether it's their kids encouraging them to get it or they took the proactive planning approach when they were, of that age, they locked in, at a great policy rate early on and just let this ride out because they knew that they could potentially need these things at the end of the day. And that's compared to my family. I grew up in New York. So a lot of my parents are still up in New York. My family's still up in New York, my direct family. A skilled nursing home in the state of New York, it could be upwards of like $10,000 a month, depending on where you are. And those costs absolutely can drain accounts at the end of the day. And it's nice having these conversations and bringing these things to light because, hey, as someone who is a family member, if you're, listening to this, watching this, and it makes you think about anything, I do think it warrants a conversation with one of us. If it's like, a reverse mortgage type conversation, if it's a combination of the two and how can both work symbiotically with one another, I think it does really warrant a conversation and at least hearing, you know, how can this affect me? What can I potentially do? And just hearing it out from there.
yeah, you got to figure out what your options are, right? You might be
Yeah.
in a position where you can get the best care, or maybe a reverse is something to do in the future. You may talk to Pete or I, and after the phone call, damn it, I can't do anything. They just
Yeah.
rejected me. Well, we don't want to. We get paid to help you, by the way. That's an industry that is not secret. When I close somebody with a reverse or mortgage or whatever, I get paid to help them. You the same thing, I'm assuming, with the policies that you help people with. I
Mhm.
had a question. I wanted to step back though. And yes, obviously, you can reach me at the contact information below. We'll have Peter share his information at the very end. Um, Question on locking in, because again, I'm not educated in the world of long-term care insurance. And I've heard there's been, over the years, the policies have kind of shifted, maybe as more people have been taking advantage of them. So
Mhm.
is there a way to get this and to protect yourself, lock it in so it isn't a policy that you're buying now and then poof, it's gone later on? Like, are these safe and secure as you go through life?
So the short answer, yes. As long as you are paying and providing those contributions to keep the
Yes.
policy alive, it's going to keep continuing to go. But on the backside, what I will say with that is you want to make sure that you're going to having a qualified conversation with a qualified company, and that's where I give the utmost respect to a company like New York Life. They're older than the state of Florida. They they're the biggest and largest mutual insurance company in the world. So their financial strength is absolutely incredible. Whereas, you may be able to extract different values or reduce premiums if you go elsewhere, but
Hmm.
God forbid something happens to the actual company itself, like you're out of control in that instance where your policy's gone at that point. And we've unfortunately seen situations like that in the past, which is extremely sad to say. And I also will just say that the level of transparency especially when it comes to this industry, is extremely important. It's like
Hmm.
something that our team takes extreme importance of because, kind of like what you were saying, we always want everything to be on the table when we have these conversations. We want our consumers and clients to know all of the ins and outs. We want them to know what's covered, what's potentially not covered, because they have the right to know that. Whereas,
Mhm.
unfortunately, there are some conversations in the industry where sometimes, something is left out, or, something's not said that should be said. And it is sad, not bad mouthing anyone, not here to do that. But it's just
But if
things
you
that,
were to badmouth someone, who would
yeah,
you badmouth?
yeah, yeah. Um, yeah, so I'm not here to do
That
anything like
Mutual of Omaha, they screw everybody.
that.
Only on the reverse mortgage, and they're terrible at
Yeah,
reverse mortgages.
yeah,
Oops, I shouldn't say
terrible,
that.
terrible. But that's why I just think it's important that you're establishing a relationship with a great professional who knows what they're doing and has the resources to like really help you out at the end of it too. Because yeah, this could be like it's a lifelong relationship when it comes to policies like this. I mean, you're constantly in contact with one another. You're making sure you understand what their interests are, what they have going on. Because, like you said, even with getting approved for some of these things, like you need to make sure that you're going about it the right way. Um, we've seen people get declined in the past for like a bulging disc in their back, and if it's just something that they may be prepared for a year or two earlier, none of that would have been the case. Or, you have to wait until something like that gets figured out and your physical therapy sessions are completely, gone to get approved. We never like seeing those or having those conversations. We try to, I mean, of course, we do our best to make sure that everyone is getting approved, but, life happens. And that's why
Mhm.
people think all the time, like, hey, it's never going to happen to me. It's never going to happen to me. But then when it does, like, it's sad to see if you don't have protection in place.
My God. So you hold. So I'm glad you brought that up. That was a question I didn't have, but I should have had. You guys and you personally, Pete, you kind of hold your clients' hands through the process. You can kind of like get an idea of their situation and what
Oh, yeah.
challenges they have, and maybe guide them along this route as opposed to that route. Is that right?
That is 1000% correct. I mean, I do not go into any conversation looking to, fit in one specific solution over another. I always pride myself in having direct conversations, making sure that I understand your full situation on how this would fit into your entire portfolio versus like, hey, this is just, spots and dots. Let's lock this in right now. I don't like folks that take that approach. I don't think it's the right thing to do. I don't think that it's just like looking into the future. It's all kind of how their financial strategy is fitting in with everything at the end of the day.
Hmm.
And that's always like the approach that we like to take with it too. So, and
That's
that kind
cool.
of it mentions back to the point where it's like you have different conversations with everyone on a daily basis. I feel like you're a financial therapist at the end of it.
Sometimes.
So sometimes, I mean, I feel like that all the time.
True, true. Yeah,
Yeah.
I get clients who they still call me. I just tell everybody like, yes, I'm helping you with a product with a reverse mortgage. So like we'll engineer it so your life gets as good as possible. Again, ain't Powerball, unfortunately, but
Right.
down the line when you have questions, when you need anything, hey, it's just unofficial because I'm technically not a financial advisor. I can't advise on any of that stuff. But I guess I'm a pretty decent common senseologist when it comes to other people's situations. So yeah, go ahead, call me and ask, and I'll give you my best advice with a disclaimer that you probably shouldn't listen to me on anything besides that getting that money out of your house quickly and easily. Um, so how does we'll wind this down. Peter, how does the process work? Like how do you go from like or how does the process go from a first conversation, identifying that this could be a good solution for somebody, and then taking them through what we call in the mortgage world is closing. You probably have some different vocabulary, which means the exact same thing.
Yeah, no, it's a
How does
great
it go?
question too. I guess logistically, how I'll say how usually these conversations go
Sure.
about is, we have sit down conversation, whether it's over a cup of coffee or Zoom, and we kind of just discuss what, doing a cost needs analysis around, where is your life at right now? Where do you expect it to kind of go? Where do we expect it to go based on what you just told us? Once we kind of have those proper numbers, set in stone, let's call it, our team kind of runs, proper analysis and illustrations to showcase like, hey, if we were to take an extremely conservative route, this is what it would look like. If we were to really kind of like bulk this up, this is what it would look like. Here are what potential scenarios can look like. Ask for thoughts around it. Ask for feedback. Ask, hey, is this something that you would even be interested in, or do we need to carve it back, or do we need to add to it? We've seen it all. And from there, we kind of like enter into what we call, I guess, like the second phase, or like, let's call it application process around, making sure that you're properly set up for success with, making sure the financial, statements are in order, making sure all, the application process is pretty seamless. And then it goes into that like health checking records kind of third piece of the process. And then from there, you kind of get slid that final contract across the table. And if it all looks good, we move forward from there too. But a lot of the times what we see people end up doing is, paying for it, their contributions on a monthly or annual basis, depending on whatever kind of sees fit for best for them. Usually in my perfect, scenario is someone's a little younger than age 50. They're taking that proactive approach, and they want to, lock something in a little bit earlier and make sure that they're set for the rest of their lives. I will tell you, the majority of conversations we have around this are between age 50 and 60.
That makes sense.
So
you can still help them though?
Absolutely can still help them. I mean, we wrote a policy
good.
for someone the other day who was 62 years old. We've done even higher than that. We worked with a judge once who was like 67. I will say, those illustrations that I was mentioning are going to look a little bit different compared to someone who's maybe 48, but we can absolutely help you at the end of the day.
Cool. Awesome, man. Awesome. All right. So if you are out there and you would like to explore your long-term care options and just see if it is an option. I don't know. It could work for some people. It could not work for others. Peter, give your digits, and then we'll, me being the good old eye in the sky admin, I'll add them to the description below. But how do the good old people? Before that, are you able to do this all over the country or certain states, or can you if you have somebody in California, I'll just license up and help you in California?
Yeah, pretty much that dynamic. I mean, our team of professionals here and advisor suite, I mean, we're covered everywhere, so we can work with anyone. So yes, if you're out there listening in any state, feel free to give me a call. I'm happy to help. And I appreciate you letting me share my information. 3 ways to really reach me. You can head over to our website, www.thebridgegroup.com. You'll see a beautiful picture of myself on there, as well as a nice bio. You can reach out to me over email, peter@thebridgegroup.com. And then our office number. You can reach us at 954-958-4220. And yeah, like you were kind of saying, and I know you're a big proponent of this in your industry, we're here to be a resource. Even if it's just like, hey, I don't even know where to start. And even if our firm can't help you, we are able to, refer you out. We want you to get the best potential help as a consumer. And that's our MO at the end of the day. So if there's any questions about insurance in general, because yes, long-term care is a big piece, but there's a lot of other things that kind of go into that entire strategy. The Bridge Group is happy to be a resource.
Cool, man. Cool. And then anybody who reaches out, I guess through the phone number, obviously if they email you, they're going to get you, but are you able to help? It goes to you, right? It's not going to go to like
well, that will go to our front office desk, but they'll transfer, ask for Peter. She'll transfer you right to me. It's pretty easy.
Very cool.
Her name's Lorraine. Cool. She's fantastic. You'd love
Lorraine.
her.
she keeps the whole everything running, huh?
She's the MVP of the firm. No doubt about it. No doubt
Lorraine. About it. Way to be, Lorraine. Thanks. Keep on doing your thing. Oh, that's great.
And I got to applaud you in this conversation too, Jason, because I think I loved meeting you when we first met. I mean, your level of enthusiasm and your level of transparency too, both personally as well as professionally. Like, I just applaud you for that, just because I think we need more of it in this world, and you provide.
Thanks, brother. I
Yeah.
appreciate that. Hey, man, listen, we're all really good at like I if you've been watching this channel for a while, you know like I'm good at nothing in the world besides chasing my kids around the backyard and getting folks reverse mortgages and occasionally HELOCs and regulars. And I think I'm one of the best in the world at that. Besides that, nothing. So um, you go with and you do your very best with what you've got, and then you realize that you have a couple, or at least for myself, I only have a couple of very focused arrows in my quiver, I guess you should say. Probably bad analogy. So it's really neat and refreshing to meet up with you, Peter, and because I know that if I have a client, maybe an adult child who needs a little bit of help. Sorry that the phone is going a little crazy here on this Thursday. If they need help and I don't know, it's not a vertical that I'm an expert in, I can hand them to you, and I've got all the faith in the world in you, brother. So I thank you.
Thank you. Yeah, no, happy to be here. This was awesome.
All right, cool. So if you need me, reach out. You've seen my information flash about 68,000 times on the screen. And for Peter, he gave you his information. I'll also include it below. Or if you want to, if you forgot to write it down and you just want to reach out to me, shoot me an email, give me a call, and I'll connect you with Peter. All right, my friend. Well, thank you so much. I really appreciate it. This was great. You taught me a lot. Again, I kind of came in here hoping I'd ask the right questions, and you just took whatever questions I had and you really educated us. So thanks, man.
No, you did great. I loved it. Yeah, I feel like still even some of my answers were a little surface level, but at the end of the day, that's why it warrants another conversation to get a little bit more in the weeds.
238.6%. Love
Yeah.
it. All right. All right, my friend. We'll catch you.
See you later.
Yep.